Hey Bowtie Nation, Joseph Hogue here, and I watch dividend stocks pretty closely, but the thought occurred to me recently, which dividend stocks are you watching? In this video, I'll reveal the 7 most popular dividend stocks among investors, the dividend stocks on every investor's watch list. I'll then show you what to watch for in dividend investments and the analyst price targets on each, including one that pays a 9.7% yield. We're getting started, but before we do, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I'll be using data from StockCard on how many users viewed a stock and how many are following it to rank our list. I'll leave a link to StockCard in the video description below. Click through and then go to Portfolios in the top menu. You'll find the Bowtie Nation portfolio in the Stock Picks section. It's free to follow, and you'll get email notifications whenever I buy or sell from the list. As a special bonus, I've negotiated an exclusive discount for all you out there in the community. Use the promo code BowtieNation, that's all one word in lowercase, for an exclusive discount beyond the free trial. We're counting up to the most popular dividend stocks among investors, and the least popular stock on this list, Stag Industrial, ticker STAG, is actually one of my favorite real estate stocks with over 1,100 investor views in the past year. A Stag owns 450 industrial and warehouse properties across 38 states for a total 91 million square feet. And while a lot of those property types like office and retail struggled during the pandemic, the warehouse market has been red hot. The rise of e-commerce and online shopping has destroyed that retail property market, but all those online orders, they need to be stored somewhere, and that's meant a boom in warehouse demand. In fact, shares of Stag returned 60% last year, beyond that 3.5% dividend yield. Now, I will admit, the dividend growth here hasn't been that great at just 1% a year. The company was aggressively reinvesting in new properties, so there is a chance that we see faster dividend growth as that spending declines and the free cash flow improves. The shares did give back some of that 60% return recently, but analysts see this getting back to that $47 a share price, which would be 19% return on top of the dividend. Another real estate stock on our most popular list, shares of mortgage REIT AGNC investment, ticker AGNC, with nearly 200 investors following it and an amazing 9.7% dividend yield. AGNC holds an $84 billion investment portfolio, with the majority of that in agency mortgage-backed securities. Now, this is what mortgage REITs do. They borrow money on those short-term rates, then invest that buying long-term mortgages. As a mortgage investor, rather than owning the properties itself, as other REITs do, AGNC is more like a financial company, so the measure you want to be tracking here is its book value per share. With rates still near historic lows, the company doesn't make a lot of money on its loans, so that book value hasn't gone too far, keeping it around $17.40 a share over the last few quarters. Now that means shares at $14.50 each, though, are well below book value, which is a good sign in terms of valuation. Now, the bright spot is that this net interest spread, that's the difference between the interest rates on those mortgages minus that short-term borrowing rates, that spread has jumped in 2020 and has held above 2%, contributing to that cash flow and the dividend. So despite the sluggish book value, analysts are optimistic here with an average price target of $16.73 a share, which would be 15% return on top of that dividend yield. Energy Transfer, ticker ET, is one of my favorite energy stocks, and I'm not alone, with nearly 2,000 views on this stock and 225 investors following it. Energy Transfer is one of the largest master limited partnerships, which means it owns those pipelines through which oil and natural gas is moved and the terminals where it's stored. At a $26 billion market cap, the size of this portfolio gives this one the safety that you just won't find in other MLPs. And ET recently raised its dividend to 70 cents a share, a 15% increase from the previous payout, and a yield of 7.2% on those shares, one of the highest dividend payouts on the list. And this is something I've been talking about on the channel over the last few months, is that massive cash flow coming from the energy stocks. One thing you'll see across stocks in the energy sector over the next few years is those energy prices are going to stay fairly high, but companies just aren't going to be spending on that new exploration or the new assets like they used to. They've got their eye on those long-term drop in demand for oil and gas, so they're going to be spending less on those new assets. And that's going to translate into huge cash flow and higher dividends for these stocks. For example, Energy Transfer spent $5.5 billion in 2017 on developing those pipelines and other assets, but it's forecasting capital spending of just $1.6 billion this year. That's resulting in an earnings jumping from $7.3 billion 5 years ago to as high as $13 billion this year. Shares of ET have jumped along with the oil prices and that dividend increase, but analysts still see this one higher by 20% to $11.55 per share over the next year. We're just getting started on our list of dividend stocks, but you're going to notice that investors aren't just focusing on those highest dividend yields in the market. In fact, some of the most popular dividend stocks here have yields close to that 3% cutoff where I draw the line on dividend investments, but they're popular because they have something else. And here, I think you need to be watching for those something elses, those other factors when you're picking your dividend stocks. And watch for dividend growth over time and a history of making those payments. Because you see, a dividend stock that can't grow its payment is ultimately going to leave you worse off than one that starts with a lower yield but then grows that each year. Now, you'll also want to just take a quick look at the price chart on the stock and make sure it's producing that positive return here as well. Because nation, the sad fact is that a lot of the highest paying dividend stocks are also the ones that destroy value with a falling stock price. Now, of course, these aren't the only two factors to watch for in your dividend stocks. We cover a lot of those other measures like the payout ratio, price multiples, and cash flow growth here on the channel. But these two factors alone are going to give you a quick clue into the rest of the business. After all, a company able to increase its dividend over time is likely growing that cash flow and managing its payout ratio. A stock price that increases means that management is holding enough of the profits back to reinvest in the company, balancing that shareholder cash return with future capital gains. Realty Income, ticker O, is easily the most popular real estate stock with over 2,800 views and 530 investors following it, making it also one of the most popular dividend stocks as well. Realty Income has 50 years of operating history and owns nearly 6,000 properties in 49 states, Puerto Rico, and the United Kingdom. And even though 83% of rental revenue is from retail operations, which are getting hit from e-commerce, I'm okay with this one because it's diversified across some of those safer types of retail property like convenience, dollar stores, drug, and grocery. And lease terms average 9 years, and occupancy has never been below 96% for the properties. Rent growth isn't terrifically strong here at just 1% annualized, but it's consistent and it supports that dividend. Now, that dividend isn't the highest among REITs, but investors love the monthly payouts, and the company has reported 90 consecutive quarterly increases. It's a 4.3% dividend yield, and the company has increased that over 5% annual pace over the last decade, so expect this one to just keep paying every single month. Analysts, on the other hand, still aren't sure about that recovery in retail property, so the average target here of $74 a share is just 11% higher, but this is definitely one to watch. We've still got 3 of the most popular dividend stocks to highlight, but I wanted to open this up to you in the community as well. What are your favorite dividend stocks? Or which are the favorites from the list? And which dividend investments are you following? So scroll down and let me know in the comments below. This next dividend stock is a favorite here on the channel. Pharmaceutical giant AbbVie, ticker ABBV, with more than 3,000 views and 474 investors following. AbbVie is a best-in-class immunology drug company, but with a strong pipeline in oncology and eye care as well. In fact, most drug pipelines are easy to read on a timeline, but not AbbVie. The company has 32 indications in phase 3 trials alone, with sales of Rinvoq and Skyrizi alone expected to reach $15 billion through 2025. AbbVie's monster acquisition of Allergan significantly increased the product portfolio and leadership in oncology, immunology, and eye care. In fact, 2 of its oncology drugs are growing to blockbuster status. The stock pays a 4.2% dividend yield and has increased that payout by an unheard of 18% annually over the last 5 years. Besides the cash flow growth going to boost that dividend, shares are up 32% in the past year, making this one of the best among large cap drug stocks. Analysts do see that share return slowing though, with just a 2.5% upside to the average $138 per share target over the next year, but I think you still get that stable dividend and many years of returns. More than 3,500 investors checked out shares of Citigroup, ticker C, over the last year, and 260 are watching the stock. Citigroup was one of the best performing stocks in our Bowtie Nation portfolio last year. It's up 49% since adding it to the portfolio, and we're holding on for more gains in 2022. It's definitely not the highest paying dividend stock in the list at just 3.2%, but it's a solid yield and a very strong dividend growth of 10% annually over the last 3 years. Now, all you out there in the nation know, banks are some of my favorite stocks this year. After 2 years of consumers having plenty of cash and cutting back on their credit spending, we're finally seeing consumer loan demand come back up. And combine that with higher interest rates, and banks could become profit machines this year. And besides the upside on higher rates and that lending, shares of Citigroup are just plain cheap. Shares trade for just 0.7 times on a price-to-book value ratio. And that's the valuation measure you want to follow on banks since they record their loans as assets. And a price-to-book of just 0.7 times is extremely cheap. So if consumer lending does come back and those rates head higher, we could easily see the shares to that average analyst target of $78.61 a share, more than 22% higher from here. And the number one dividend stock investors are watching, shares of AT&T, ticker T, with more than 6,700 views and almost 1,000 investors watching this stock. After a long time just hating on this stock, I recently went bullish and bought 600 shares in one of my retirement accounts. It was up as much as 15% before the Q4 earnings report, but I like this one on that long-term dividend and the value. Like I said though, I haven't always been a fan here. I've been warning investors on AT&T since 2018 as they continue to pile on more debt in those acquisitions like Time Warner and DirecTV. It ballooned its debt to over $154 billion and a debt-to-equity ratio of over 1.07, putting that dividend in jeopardy. But the company is now in the process of selling off those acquisitions, which is going to bring in the cash it needs to pay down that debt. And I think telecom subscriber numbers are looking to be stabilizing. That dividend of 8.6% is expected to come down, and in fact, it's probably going to be right around the range of 4.5% post-merger. Beyond that dividend, though, which is still going to be very strong, being able to just focus on telecom makes this a much more manageable company, and we could see a boost to revenues on 5G over the next few years. That could help the shares get to the average analyst target of $30 a share, which would be a 25% higher on top of the dividend. Check out the 2022 portfolio on Stock Card, or click on the video to the right to see the highest paying dividend stocks in each sector, 11 of the highest yields you'll find right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.